Aziz, you've written in the most recent investor letter about the likelihood of a market correction without predicting any timing. How do you expect the portfolio to behave if such a scenario was to unfold?
Well, I think history teaches us that we're going to have a market correction every couple of years and a bigger one every 5 to 10 years. And so it's not a stroke of genius for me to predict that there's going to be a market correction at some point. Uh, and we've had a big run up and valuations are high, so that increases the probability that happens sooner rather than later. But it's just the nature of markets that you're going to have these from time to time. I think historically we've demonstrated that our process and strategy is very resilient in these situations. And I think I mentioned in the letter, in the 20 something years that I've been running the strategy, when the market goes down by 10% or more, we usually our portfolio holds up fairly well and only goes down by 70 something percent of that. So if the market goes down 10%, we usually go down by 7 or 7.5. And then actually the bigger the drop in the market, the better our portfolio holds up. So I've always liked that aspect to it because it protects our capital on the downside. But the other thing is it gives us, because we've protected our capital, it gives us the opportunity to buy businesses that we like, that we've always followed and just never got the chance to buy at depressed prices. So it's a great place to be, to have capital that's been protected and cash on hand when the market is down. So I think that is going to continue to be the case. We've seen it in March and April of 2025, just how well the portfolio held up. It was a very short-term decline in markets, but when the markets were down almost 20%, we were down in the single digits. So we managed to protect our capital. I think that will happen again. It's basically the nature of what we do, and it's actually a huge advantage that we've always had. And a lot of the alpha that we've generated over time has come from that. It's come from us protecting our capital during downturns, and then us being ready and able to aggressively buy at depressed prices. This kind of is the DNA of what we do. We just haven't had a big drawdown like that in a while, but it will come, and when it comes, we will be ready.
I think maybe the other thing to add to that is that if there is a market correction, it is very path dependent. Yeah, and broadly speaking, there are two types of correction we could get. One is that it's very localized in AI and it replicates the .com correction or crash much very closely. But the other is that you have a much more sort of economic collapse or crash, and that would be different. That would be sort of what you've been talking about, just now, where the market goes down 20, 30, who knows, 40, and we go down, by half that amount. But if it were to replicate the .com crash, and it were just tech, just localized in tech, we could easily see a situation where, given concentration levels now, where the market could be down 30, 40%, and we could be up 10. I'm not making any predictions here, and I'm certainly not saying that that's what's going to happen. But if you look at what happened during 2000 to 2002, we saw the market down 40, and at the same time, a selection of boring, but good businesses were up 10, sometimes 20%. So that is very much a possibility, and obviously that's what we hope happens. But we prepare for all eventualities.